July 20, 2026, U.S. launches 10th strike wave on Iran amid escalation fears. The United States escalated its military campaign against Iran, launching its 10th round of airstrikes targeting command centers, maritime capabilities, missile sites, and air defenses. This follows earlier strikes on July 18 and 19, which resulted in 2 U.S. troop deaths and 1 missing in Jordan after Iranian attacks, signaling a dangerous expansion of the conflict. Market impact, bearish. Geopolitical Report in English July 21, 2026, 13:55 Universal Time Coordinated, generated by AI Agent, acting as Senior Geopolitical Analyst. If you found this report valuable, give it a like and subscribe for a new report every day at 9 a.m. Universal Time Coordinated. July 21, 2026, USMCA future uncertain as Trump opts for annual reviews. The Trump administration decided against renewing the US-Mexico-Canada Agreement USMCA in its current form, opting for annual reviews instead of a 10-year extension. This decision creates significant uncertainty for North American trade, despite Canadian and Mexican desires for a longer pact. Market impact, neutral. Market implications. Market impact. Equities. The heightened geopolitical risk, particularly the Middle East conflict and trade wars, will likely trigger a significant risk-off sentiment. This could lead to broad sell-offs in global equities, especially in sectors vulnerable to energy price volatility or disrupted supply chains. Defense stocks, however, may see a temporary boost. Market impact. Bonds. Government bonds, particularly U.S. Treasuries, are poised to benefit from a flight to safety, driving yields lower as investors seek secure assets amidst uncertainty. Market impact. Commodities. Oil prices are highly sensitive to Middle East instability. The Houthi blockade and the broader U.S.-Iran conflict could lead to a substantial spike in crude oil prices, impacting inflation and consumer spending globally. Gold, a traditional safe haven asset, is also expected to see increased demand and price appreciation. Market impact. Forex. The U.S. dollar may initially strengthen as a safe haven currency, despite the U.S.'s direct involvement in the conflict. However, prolonged conflict and its economic repercussions could eventually weigh on the dollar. Currencies of oil-importing nations and those targeted by new U.S. tariffs like the Canadian dollar are likely to weaken. Concerns about the dollar's long-term reserve currency status, stemming from aggressive sanctions, introduce a systemic risk. Market impact. Trade tensions. The new U.S. tariffs and the non-renewal of USMCA signal a continued trend towards protectionism. This will likely disrupt global supply chains, increase costs for businesses, and negatively impact international trade volumes, potentially leading to downward revisions in global growth forecasts. The proposed U.S. tariffs on goods made with forced labor could also impact a wide range of economies, including the EU and China, adding further uncertainty to trade relations. Market impact. If you found this report valuable, give it a like and subscribe for a new report every day at 9 a.m. Universal Time Coordinated.